Everyone, welcome to Market Insight for the week of June 17th through the 21st. I'm going to change our usual approach to the market this week because of rollover taking place. Rollover takes place generally over the course of a week. And it actually started, I think, on Friday. And so traders are moving out of the June contract and into the September contract. Excuse me. This is going to affect our levels, and we're going to have to make some adjustments. And the reason for that is the continuation contract method that we usually use. This one here, the ES equals 12 VON. It hasn't rolled yet because it's dependent on certain volume thresholds, which just haven't occurred at this point. Now, that's, there's pluses and minuses to everything. So the pluses to this kind of continuation chart is that it retains the contract highs and lows, which is really important because those frequently get retested in coming weeks and months. But the rollover takes place only once the volume is larger for a couple of days, and that hasn't occurred yet. So the levels are going to be off. You can see on the monthly, we made the high of so far this past week around 54 and change, and see it a little bit better on the monthly. We closed the monthly. We closed the weekday. We closed the market on Friday at 54.37.5. But that's the June contract value, right? The September contract closed at 55.00 and 50. So quite a bit of difference. I think it's like 65 points of premium between the two, the June contract and the cash index. That'll collapse. That'll get back down to around 4 or 5 next week sometime. But right now the premium is quite high. So the September contract closed at 55, and so we're going to just use the 240-minute contract to look at things for this week, just to keep things simple. And here you can see we're closing. This is the June. This is the June contract, the September contract. Just put it ampersand ES, and so that's closed at 55.50. So we're at the top of the 240-minute trend channel, the uptrend channel. We started here at the beginning of June. The end of May was the end of the last down move, and then we've been trending up since the month began here. And as it's typical after a rally up, like we got on Tuesday afternoon and then Wednesday, right? Typically, then we go into congestion. As Toby Crable taught us, expansion leads to contraction, or expansion leads to consolidation. And then consolidation, we see here, leads to expansion. Consolidation leads to expansion. Expansion leads to contraction. Expansion leads to contraction. This is the endless cycling of the market. The endless cycling of the market. Okay, and it's very useful to see this. So currently we are in contraction. We're in a congestion phase. And so let me get my notes here. And notice that these create structure, right, for the next breakout, either up or down. And that's what this one's doing too. It's creating structure, a consolidation structure, which will break out either to the upside or to the downside. So resistance lies at the top of the trading range here around 55. Now, if we're going to continue to see congestion action into early next week, Monday, Tuesday, we may see the resistance a little bit lower, maybe around, 55, 55.12, somewhere in there. May not get up. You see this a lot, when we establish a high in a trading range. Grab the circle pointer. When we establish a high in a trading range, when we revisit it, we don't always get up there. So we may not see it get all the way up to the top. And that would be a clue that we're going to head back down towards the bottom of the trading range. And so we have good support, I think, down here at the bottom. We have Friday's low, which is 54.62 in here. And then we have this other high, the prior trading range construction of 54.50 and change. And so we have a lot of confluence. We have the diagonal demand line coming up, and then the horizontal support line in this area. And so I boxed that out. Let me clear this off. I boxed that out here somewhere between 54. We should see pretty decent support. Now, should this support break, the obvious next level is 5,400, that nice round number we have, and we would be heading down towards there. Because if we break this area, we've broken the demand line decisively, we've broken this resistance decisively, and the odds would favor a push back down to this level, maybe even lower. Right? Now, breakout to the upside, that would target, I think, 55.35 and then 55 this week. Now, let's take a look at the point figures here for a moment to see what's available in terms of cause and projections and stuff. We haven't looked at these in a while, so it's useful to look at these now, I think. So here is the 50 by 1, so a 50 box size by 1 box reversal point and figure chart. Now, this is of the S&P cash index. We always use the cash index for point and figure charts because rollover, as we're now kind of dealing with. Fortunately, it's only once a quarter, but rollover creates some challenges in point and figure chart projections. And it's just so much easier to use the cash index. So I like easy, and so we're using the cash 50 by 1 here. And so you can see we have good projections up here with a stepping stone confirming count up to 55.50. And right now here at this point, we're in the cash index, we're still 120 points away from that level. So we still have some headroom there. Let's look at a little higher time frame point and figure chart. This is, again, the cash index, and this is a 100 box size by 1 box reversal. So you can see very nice accumulation structure here. This looks really good. This is what we look for, typical accumulation structure here. So we've got a very nice accumulation structure, and that's along the 3,900 line. There are 20 figures representing 2,000 points of cause, right? So we would add that cause to the 3,500 level. That would give us a projection to 5,500, right? And that is nicely consistent with our 50 by 1 point and figure chart, our little more sensitive point and figure chart. So those two are in sync, which is a positive, and we've got still have some headroom here for that. So still have some more upside potential. And we also could add the 2,000 cause here, the 2,000 points of cause. We add it to the low there at 3,500, but we could also add it to the count line here, the 3,900 line. That's legitimate as well. And if we did that, that would give us a higher projection up to 59. And we would bring that point and figure count into play if we start trading up above 5,500 here. And that might mean that we come up to 5,500 or 5,550 on the, let's go back to the other one. On the 50 by 1 point and figure chart, maybe we pull back a little bit, create some cause in here for then the rally up to 5,900, if that's what's going to happen. Who knows? That's a fantasy at this point. Not saying that that's going to happen. Just kind of thinking ahead what's possible here. In any event, we have a little more to go, but we're getting close to the top end of the point and figure projections. So we'll keep an eye on this in the weeks as we go forward. So next week, we've got quite a bit of stuff going on. On Monday, the 17th at 4:30 Eastern Time, we're going to complete Wyckoff's 1930-31 case study. We spent the last 2 or 3 sessions on this, and we've got one more to go. I don't know if you heard the comments by one member last practice, but saying that going through this 1930-31 really made a big difference, or is really making a big difference in his trading. So if you haven't looked at it, I'd encourage you to look at it. It is just gold when it comes to tape reading. So we'll do that on Monday. Helen is doing her meditation classes. She's got the second class for Tuesday night, folks. That started last week. So this will be the second class for the Tuesday cohort, or the Tuesday group. That's Tuesday the 18th at 7. And then because there were so many people who had signed up for this, she decided to do a second class. So that is, the second class is starting this week on Friday the 21st at 4 p.m. Okay, so we've got 2 classes, 2 meditation classes going on. The first one that started last week is on Tuesday at 7, and then the second one that starts this week is on Friday at 4. And then, of course, we have deep practice, our normal schedule, on Thursday the 20th at 8 o'clock Eastern time. So that's what I have for you this weekend. Have a great rest of the weekend. Enjoy it. We've got some nice weather here in southern New England, and I'm certainly going to enjoy it with Helen today. And then have a great trading week next week, and I'll see you multiple times next week. Everyone, have a good one, and I'll see you next week. Take care. Bye-bye.